Hello everyone. Good morning, good afternoon, good evening, and welcome to another episode of Toronto Centre's virtual webinar series on supervision post-COVID-19. Today we have 150 registered attendees for this webinar from 38 different countries. My name is Clive Briault and I'm the chair of Toronto Centre's Banking Advisory Board. And with us today, our distinguished panelists are Pai Hong Mok, Executive Director from the Monetary Authority of Singapore, and Alejandra Olivares Castorena, who's General Director, Methods and Procedures for Supervision at the National Banking and Securities Commission of Mexico. So welcome to Pai Hong and Alejandra. It's great to have you with us today. Managing through the pandemic and adjusting to the new normal has not been easy for financial supervisors. As its contribution to this effort in late September, Toronto Centre published the most comprehensive, practical and cross-sectoral guide to supervision in the COVID-19 world, with input from a wide range of supervisory authorities and standard setters. I do encourage you to read it, and we'll put up a link to it in the chat function in a moment. The COVID-19 outbreak has accelerated the trend towards the increased use of technology and digitization within the financial sector. Most people expect this shift to continue and not to be reversed. The business model of financial institutions is going to become more digitally based as they accelerate the adoption of technology. But meanwhile, a combination of these general trends and the constraints on undertaking on-site visits to supervised firms has increased the pressure on supervisory authorities to adapt their own supervisory practices with the help of technology, what is known as supervisory technology or SupTech. And today we're going to focus on this use of technology to improve the effectiveness of supervision. We do very much intend to leave time for your questions towards the end of this webinar, so do please use the Q&A tab on your Zoom page to submit your questions. And finally, by way of introduction, I would like to thank the key sponsors of Toronto Centre, namely Global Affairs Canada, Swedish CEDA, the IMF, Jersey Overseas Aid, USAID and Comic Relief. And I'd also very much like to thank Demet Konachka and Diana Bird of Toronto Centre, who have worked so hard to bring you this quality seminar. But let's begin with the questions and answers. And let's start, if we may, with you, Pai Hong, and ask the question, what are supervisors hoping to achieve through the increased use of technology and data?
Thank you, Clive. Maybe I'll start with a few introductory remarks and we'll dive right in. Technology is indeed transforming the financial sector. Technology has always featured in financial services, but in the last decade, there was a steep increase in the application of various technologies in financial services by both existing players and new entrants, including fintechs, RegTech firms, and other digital players. The drivers are well recognized. Substantial increase in availability and granularity of data, which lend themselves to data analytics and ability to derive better insights. Improved infrastructure such as cloud computing and APIs. Increased ease and affordability of data storage and exploiting large volumes of data. So the financial landscape and consumers' expectations are changing as well. And financial institutions are reinventing to stay ahead. So data gives financial institutions better insights that allow better customer segmentation and product marketing efforts. If done well, financial institutions can predict what customers need or want and offer them even before they ask for it. This gives them the competitive advantage if done well. Increasing regulatory requirements is also a key driver for financial institutions to turn to technology to improve regulatory reporting, compliance, and risk management. This is in fact the area that's fueling the RegTech space. And we are seeing, in fact, I recently saw a report of a growth in the RegTech market with about more than 1,000 RegTech firms globally. And over the last 5 years, the global private investments in RegTech has expanded. And more recently, we talked about the COVID-19 pandemic. It has accelerated the drive towards digitization. Customers are encouraged to adopt online and digital channels instead of physical visits to branches. So in Singapore, a recent private sector survey of retail customers noted that 70% of respondents have used online banking frequently since the start of the pandemic. So we are also embarking in paperless and digitization initiatives to facilitate remote working arrangements and reduce face-to-face interactions. What all this means is regulators like ourselves also constantly need to refine our supervisory approaches. And SupTech is now a strategic priority for an increasing number of authorities. And the recent FSB report, if you have seen it, most authorities already have in place a SupTech innovation or data strategy, or are in the process of developing one. So in MES, our SupTech division, which I oversee, has an overarching objective of enabling effective and efficient financial supervision through the application of technology and data analytics. And we achieve this by several ways. So developing platforms to provide timely and relevant data and information to supervisors, applying data analytics techniques to identify firm-specific risks or emerging risks in the sector or the system, developing tools to augment surveillance and inspection capabilities, as well as strengthening supervisors' skill sets in data science through partnerships in projects and training. I shall stop here. My 3 minutes is up, and I'll hand over to Alejandra. Yeah.
Okay, thank you very much for that, Briault. So yes, moving on to you then, Alejandra, can we ask you to describe the effect that the COVID-19 pandemic has had in accelerating the technology-based innovation for supervisory agencies? And within that, what are the expectations and goals that your authority is trying to achieve from the implementation of SupTech?
Yes, of course. So as Pei has already said, we can see that COVID-19 has accelerated technology-based innovation, and it may lead to an accelerated adoption, a more accelerated adoption of SupTech in all regulatory and supervisory agencies. So you have already said that there have been operational restrictions resulting from COVID. So they have limited entry to supervised financial institutions and traveling. So suddenly supervisors had to conduct supervisory reviews remotely. So they have suspended on-site reviews, they have limited them to priority inspections, and they have replaced them with remote reviews. So there is another effect, and it is the economic damage that results from lockdowns and the reduction of economic activity. So this puts some pressure in supervisors to prevent and monitor increases in risks and vulnerabilities of the financial institutions. So they need to react proactively in order to maintain the financial stability of the financial system. So when you are in a context in which in which there are operational restrictions, you need to improve analytical capabilities of supervisors, and you have to enhance surveillance by using technological tools. And this is why SupTech becomes more relevant in these days. And you need to gather more granular information, and maybe you will need to monitor in real-time data for a timely detection of emerging risks. So you will need to be more efficient in processing and analyzing this information, and you will need an intensive monitoring of key risk indicators to have and allow early interventions from supervisors. So Pei already said that there was like a general trend to digitalization, and it was before also. I can say that it was before, but now is leading, this COVID-19 is leading to a more intensive use of technology, not also from the providers of financial services. So now we can see in some publications, and I can share with them afterwards, share with the audience, that in this period, supervisors have been using new ways of SupTech to address some challenges that they can find. So we also have human resources restrictions and financial restrictions. So if you can have adequate and scalable technological tools and solutions, supervisors might be in a better way to effectively engage with these emerging and heightened risks. So CNBV has been working in different SupTech initiatives that I can talk about them later, but we are hoping to have a more effective and proactive monitoring of risk, and we are working in enhancing our surveillance activities. We have this enhanced surveillance supervision from March 2020, and we are working in addressing these new risk priorities by using remote supervision. So SupTech will be a key tool and for our for 220 and 221 for the CNBV.
Right, thanks a lot for that, Alejandra. So some interesting drivers there for the use of SupTech. Let's move on to what exactly you're doing in terms of the use of technology and how that's helping to enhance supervision. So Pai Hong, which new technologies have you used to augment your supervision of the industry through SupTech, and how has that in practice helped to enhance supervision?
Yeah, I can share a few use cases of how we use technology to augment supervision. But before that, I thought useful to highlight the process of how these use cases are identified and prioritized quite quickly. So MES is an integrated supervisor where supervisors of banks, insurers, and capital market intermediaries are under one group. And supervisors and inspectors identify areas that we thought would benefit from digitization and digitalization. And there's a difference between the two. If the audience find useful, I can explain later. And in some cases, for example, our inspection processes, we have undertaken a business process re-engineering exercise, or BPR, to identify pain points and potential solutions. So we have a list of pain points or areas that supervisors think will benefit from technology or data analytics. And then we have this SupTech team with a diversity of competencies, data scientists skilled in Python, R, or Tableau. They're good at visualization. They know AI, ML, network analysis, etc. So we kind of try to map the use cases and the supervisory needs with the SupTech competencies and prioritize them based on the impact in terms of contribution to our supervisory objectives of efficiency and effectiveness. Some of these are more transformative and impactful as they benefit multiple departments. For example, the use of text analytics on financial statements. They can benefit smaller entities like fund managers and security brokers, but they can also be applied to banks and insurers. although the specifics of what we look up for in each sector will differ. And similarly, developing a model for predicting financial distress will be useful to different sectors. I will just quickly share a use case, and I'm happy to share more if there is time. And this is not really specific to COVID-19 because we've been doing this since even before. And it's a very common use case for both the RegTech and SupTech space. And that's for AML, anti-money laundering. And we use a network analysis for the STRs, or suspicious transaction reports. So our AML department has applied network analysis techniques to suspicious transaction reports, or STR for short, as well as data collected from financial institutions and intelligence from law enforcement agencies. So this has allowed us to identify networks of suspicious transactions or suspicious activities across the financial sector. And this has come a long way. And I personally recall many years ago as a supervisor, I was reviewing the hard copies of the STRs, and with no benefit of insights from other STRs filed by other financial institutions or intelligence from other agencies. It is a very silo and manual process in the past. And it was impossible for any individual to review the many STRs filed by the financial institutions and make sense of them without the help of data analytics. So the use of the network analytics tool has helped to identify clusters of individuals and entities that exhibit suspicious behaviors. And this has helped us to target inspections, more focused inspections, as well as follow up by our offsite supervisors with the relevant financial institutions. The data inputs for these network analysis thus far comprise mainly of information from structured data fields in the STRs. For example, the names of persons, the companies, the relationships, and the fund flows. And we are working to further enhance this by adding transactional information to these data sets and augmenting it with NLP, natural language processing, to extract information from the unstructured textual data within the STRs. So for example, the narratives explaining the unusual nature of the customer transactions and the relationships between counterparties to incorporate in the network analysis for a richer analysis. So I think to wrap up my part, I think technology and data analytics have great potential to improve our supervisory capabilities, and we're beginning to see only the initial benefits. And I think there's much more to experiment. And this is an area where regulators can come together to exchange ideas and learn from one another. I shall stop here. Thank you.
Okay, thanks a lot, Pai Hong, and a very interesting specific example there of the use of SupTech and data analysis. So turning to you again, Alejandra, that's an example of a way in which SupTech can go hand in hand with using new and additional sources of data and information. In that case, analyzing documents, but I know that other supervisors have already begun to explore the use of social media. So can you give us a bit of flavor of how the CNBV is using data and other information in its implementation of SupTech?
I'm muted. So CNBV's efforts to implement supervision technology have started in 2018, so it's recent. But we had to deal with some challenges in supervision. First of all, we have a great number of supervised entities, almost 5,000. So I would say in big numbers, half of them are supervised more comprehensively in the main significant activities, and the other half is exclusively supervised for AML CFT. Also, we have new supervised entities resulting from the new fintech law, the financial technology institutions law. So it implied for CNBV, a more technological approach for information reception and processing, according to the nature of these new supervised entities. Also, we have to deal with more than 600 reports for 20 supervised sectors, and it's quite a lot in this periodical reports. And also, as a starting point, CNBV was using some years ago basic tools for analyzing information, so it was not a great idea for us. Also, we have, as all supervisory agencies, these limited human resources to develop on-site and off-site supervision activities with large volumes of information to process. So we really need to do something about it. So the objective was to improve our capabilities to address all these new challenges and the innovation challenges and emerging risks. So we saw SupTech as a way to support our activities. And we started with two main areas of the development of SupTech. First of all is data collection, and the other is data analytics. And CNBV, first of all, started to adapt its infrastructure and improve its analytical skills. So in terms of infrastructure in 2019, we started to develop a SupTech platform that will allow the reception, storage, and processing of the automated processing of information. So in the first stage, we will be receiving information from financial technological institutions through application programming interfaces, APIs. And also we'll be receiving will storage and process AML CFT large volumes of information that we gather from regulatory reports, but also from the information collected from on-site supervision or information requests. So we will be finishing this platform. We have already developed almost all of the first stage of the platform, and we are expected to finish this in 2021. But in the other field, in terms of analytics, we have been also the platform in the first stage has provided some analytical dashboards to analyze these large volumes of information and start with descriptive analytics, and then to move, and then we will be moving to advanced analytics. So in advanced analytics, we have been working in sprints or in pilots. So in 2019, we started a project, and we finished it in this year, in the first quarter of this year, to apply big data tools and artificial intelligence into business cases. One of them was for popular financial sector, and the other one was for financial technology institutions. And we were trying to predict the behavior of the credit portfolio and also do some segmentations and classifications of entities according to their risk profiles, and just to monitor the way they were and identifying some patterns in their activities. And also we are doing some we can say SupTech labs, and we are mostly interested in this phase in COVID-19 in credit risks, financial fraud, and these segmentations of entities to continue with this. So in this last quarter of 2020, we are starting another project with the World Bank, and we will be adopting and implementing analytics in 3 different priority areas. It will be to continue AML, CFT, risk managing, and risk analysis to identify patterns and predict some behavior. We will be also working in credit risk and financial fraud, as I already said. And we will also be developing supervisory capabilities all over the organization, because what happens in some supervisory agencies is that the knowledge is not spread evenly, and you have these small groups or more qualified individuals. But what we need to do here in the CNBV is to provide all these technological tools and resources for all supervisory areas and departments, so that they can use in different business models and business needs. So we have been developing a top-down strategy, because we think that it will work for us better, and because it has for us some important benefits, like data management. We can have this data warehouse also for cybersecurity and security and information issues that we need to deal with. We can work in a common infrastructure. We can have these high-skilled groups of people to deal with different business problems. So we are now working in these advanced analytics strategies and in these priority areas for CNBV.
Okay, great. Thanks for that, Alejandra. Some very interesting initiatives there, and clearly some that will take quite a long time to bear fruit, but I'm sure an investment that's well worth making. Let me just, at this stage, ask you both one of the questions which has come up from the participants, and let me encourage, please, other participants, do please put your questions up on the Q&A icon button. But there's one question here saying basically that we can see in the financial sector that firms are making a lot of use of apps around opening bank accounts, information security, client protection, and the like. To what extent can SupTech help supervisors to supervise that kind of activity? So, Pai Hong, any thoughts on that? Is SupTech actually a benefit when it comes to supervising some of those fintech type applications and developments?
Well, I think for this, there are two things we look out for. One is info security and the cyber security of these digital platforms, if that's what you call them. And the other thing that we look out for, and this is something we are studying quite keenly, is dark patterns. Whether these digital platforms, is from a market conduct perspective, whether these digital platforms use interface, UX, UI, that are designed to mislead or trick users into making some unintended choices. So this so-called dark patterns could be quite prevalent in the e-commerce space. At least when we studied in our jurisdiction, it's not so prevalent in the financial sector space, but it's worth more studying. It's something quite interesting. And we are actively studying this as part of the preemptive supervision. So I think these are some areas that we are looking out for. As to the application of technology, maybe not yet, hasn't caught up on this space. But these are the two emerging risk areas that we are looking at. Yeah.
Okay, thanks a lot, Pai Hong. And same question to you, Alejandra. I mean, any experience of using SupTech to help supervise elements of fintech? Sorry, you're on mute.
So we haven't started dealing with apps, but I think that there are some publications also that there is a way to deal with those, and so we will need so our fintech, our technology financial institutions will be starting to operate in 2020 and 2021. So we will be working in analyzing all these behaviors in this year. So we haven't started yet, but this is a priority because they will start operations and we will be dealing with all these different new ways of providing financial resources, and we will be using SupTech for analyzing those, but we haven't started yet.
Clive, can I add?
Please do, please do.
Yeah. So to the extent that these digital platforms make use of AI ML solutions to whether to do their customer segmentation or to target customers or to make credit decisioning using AI ML. So this is an area where we are looking at as well. So we have developed a set of principles called FEAT, F-E-A-T, which stands for fairness. Ethics, A would be accountability, T will be transparency. And this is guidance to the industry to say that when you use your AI ML solutions, please align them to these 4 principles. And in helping the industry to do that, MES has set up a consortium and coming up with a Veritas tool, which helps the industry to assess their AI ML solutions against the FEAT principles. And I think we'll be making some announcements during our FinTech Festival, and do look up for that as well. So this is an area where we see increasingly even incumbent banks or new digital banks or digital platforms are using AI ML to do various things like credit scoring, customer segmentation, something that we are keenly looking into to make sure that they adhere to the FIT principles. If that helps, thank you.
Okay, thanks very much. And one question specifically to you, Briault. Could you elaborate a bit more, please, on the proposed idea of a model predicting financial distress?
Yeah, so we are still exploring this model, and I think it's a bit difficult because we haven't experienced a lot of failures here. So I think it is difficult to predict a bank failure, but bank distress, that is possible. So we can kind of make use of certain factors to determine distress, although failure is a bit hard to model because of the lack of the history. But I must say this is very nascent and somewhat difficult to do because of data cleanliness issues as well. But just to share, I've seen some vendors doing it, and it can be quite impressive and useful if done well. And I'm really looking forward to a model that actually gives us an alert, preemptively. And I think this model I have seen is on listed companies. And if we can see that going forward, the listed company indeed goes into trouble, meaning that the model is effective and can be tested and proven, I think it can be really a very powerful tool. Unfortunately, we are in the nascent stages of developing this. So hopefully, if there's an opportunity, we can share more in future. Yeah, but not at this stage, unfortunately.
Okay, thanks very much for that then. So we may have to wait a little while before we get the full response to that question, but thanks for that. Alejandra, moving back to you, you've mentioned a few times in your answers various issues relating to the capacity and expertise of the supervisory authority. So from your experience, what do you see as the main challenges in driving technological innovation by a supervisory authority? And what is required for a successful implementation of SupTech?
Oh, yes. So from our experience, we have already said that SupTech can generate several benefits for supervisory agencies, and there is no step back because we have these several challenges that we have already listed, and we need to enhance our supervisory activity. But SupTech also needs the development of capabilities, and we have to address some important challenges. So I would say that challenges can be grouped in three, for me, can be grouped in three different areas. First of all, I would say infrastructure and data. The other one would be human capabilities. And the third one would be to have a solid strategy in the organization. So in terms of infrastructure, so supervisory agencies will need to have enough technological resources to receive, store, process information. But also data is a very important part of it because we will need data quality, standardization, and data completeness from different periods of time, from several years, most of the times. And they are crucial to develop advanced analytical models for effective prediction or classification. So in terms of infrastructure, it can be adapted on time according to supervisory needs and advances. So you can start from your basic infrastructure, and then you can build on that. In terms of capabilities, I think that this is a very important challenge for supervisory agencies because the traditional supervisory profile is more prudential, more financial, economic. They have economical and financial skills, but not really technological and skills. And they don't, in many cases, they don't even know which technological tools are available, how to use them. And so it's important to understand which are those gaps in the organizations and deal with them to improve and support supervision. So supervisory agencies should implement training programs, but maybe they should hire new professionals with these new skills, or be supported with an international organization or a private company. Also, supervision technology needs a multidisciplinary group of people within the organization. With supervisors, because they will bring the business cases, of course, IT department, data and analysis department, like leading group with cross-functional activities, and they will be also developing these capabilities, because you might also need data scientists and data engineers and so forth. So in terms of the strategy, we have to see that SupTech strategy is gradual, but you need to define it before. Some organizations use a top-down strategy, others bottom-up strategies. I have stated before that I think that for a big organization like CNBV, the top-down strategy works better for many issues of data infrastructure and supervisory needs and the spread of knowledge and so forth. So it's important to have a leader or a leading group with strong leadership skills and have a very good understanding of supervisory needs and also technological tools, and have this good coordination with all the team members. So another thing that I think it's an important challenge for SupTech is that SupTech needs to be integrated with normal or previous processes, with internal processes, and it's because sometimes we have this SupTech project or other initiatives, and they are not really integrated in the organization. And also another thing when supervisory agencies are starting in this process, they might have to deal with cultural challenges to adopt SupTech. So I think that this takes some years for organizations to know, and they also have to invest in human resources and technological resources. So this is something that needs top management approval, or also the approval from the board. So you really need to state which are the benefits and the objectives of implementing SupTech in order to address all these challenges. So about the effective implementation, so what would be? So as I said, a solid and achievable strategy, also assigning adequate financial and human resources for that, engagement from top management and from all the different involved departments. It can be helpful to work in sprints or in having short-term goals with a long-term vision. So that you can advance in a gradual implementation of SupTech. Also, the roles of the different departments should be clearly defined, and benefits should be acknowledged all over the organization, and you have to recognize existing gaps and capability needs. And you have to adopt the kind of strategy that better deals with your organization. If it's top down, as in CNBV, let's do it. And also Pei also said that strong coordination with other supervisory agencies. I think that is very helpful, because you can learn from different models that have been applied in different parts of the world.
Okay, thanks for that. Very comprehensive list there of the challenges and how you're addressing them. Pai-Hong, a similar question for you from the audience, but asking it perhaps a slightly different way around. What do you see as the main risks to you as a supervisory authority from the use of SupTech? And what could possibly go wrong?
Well, to the extent that we use AI/ML models in our solutions, what we expect of the industry, we should also subject ourselves to them. So I earlier talked about FEAT, fairness, ethics, transparency, accountability. So to the extent that I think we deploy AI/ML solutions internally, we also want to make sure that the data, the inputs, and we use does not systematically disadvantage or have any inherent unintended biases within the data. And to the extent that they affect the FIs, we should be transparent. But I think we have not advanced to such a stage. But this is something I think in our minds, that even as we subject the industry to such standards internally, we should be able to stand up and live up to such standards as well. So essentially, also the risk of black boxes, we don't want to create black boxes that supervisors, also partly key man risk. When certain people establish or build certain models, there has to be continuity, and the rest explainability, and the rest should be able to understand. And I think when we started out building some prototypes and proof of concepts, we have some very good supervisors who are really well equipped with the data analytics and programming skills to build tools that help them supervise better. But when they leave, nobody could take over their codes, and nobody could troubleshoot their tools. So we learned as we move along, and some of these things, when we move into when they pass the pilot stage and move into more production stage, the entire enterprise governance standards and principles should apply to some of these tools. Yeah, I hope that kind of share some of the experience that we have. Yeah, and maybe just to share a couple more lessons learned is we shouldn't automate inefficient processes. So I talked about BPR earlier. Many companies, including MES, we have adopted RPAs, robotics process automation. And we have benefited from this. We have saved man hours by automating manual processes. These are useful for quick and easy wins, but my personal experience is RPAs don't typically deliver fundamental or radical changes, as opposed to perhaps other types of initiatives. So we shouldn't automate inefficient processes is something that a takeaway that I have. Yeah, maybe I'll stop there. Yeah.
Okay, yes, no, great, thanks for that. And one, I think also related question that's come in is about the concerns out there with respect to the concentration in the provision of some services. I guess cloud computing might be an example of that. And I suppose thinking about that and thinking about the use of larger data sets by supervisors as part of their SupTech, it may be that supervisory authorities, like financial institutions, end up making quite a lot of use of third parties. And in some cases, those third parties will be heavily concentrated players, large concentrated players. So you share some of the same problems as do financial institutions. Not quite sure which of you would like to pick up on that aspect of the question. Is there a risk that you're too heavily exposed to a large market provider of some of these SupTech type services? Alejandra,
Yeah.
perhaps.
No, it's very simple. Yes, third-party dependencies are risky. So yes, it's a risk that we need to take into account. We are thinking about an hybrid kind of model for storing and processing information, just to not to be so dependent of third-party providers. But yes, cloud services are a very good example of that.
Yeah, I think cloud providers, there is potentially a concentration issue, because we are seeing about 3 or 4 cloud service providers, three or four big ones that commonly financial institutions use. And we monitor the concentration risks quite closely. As for third-party service providers, not for us, but more for the financial institutions, when they engage fintech or regtech firms to help their own risk management initiatives or compliance initiatives, we make sure that the financial institutions conduct due diligence on these third-party service providers and assess their track record, their reputation, their technical capabilities, their ability to ensure that the data is stored and protected. We do expect them to do this kind of due diligence, particularly focusing on the data security and info security. Yeah, so these are some of the expectations that we do convey to the financial institutions when they engage third-party vendors.
Oh, thank you very much for that. Two interesting answers there. Moving on to something a little bit different, a question about the use of SupTech for undertaking risk assessments of supervised firms. So I suppose one way of presenting this question would be to ask, how far do you think SupTech could go in more or less automating the risk assessment of a financial institution? Alejandra, first.
So yes, I think that it will not replace all the risk matrix for CNBV. So we will be using our existing tools, and SupTech will be very useful for supporting several activities, especially if we need to classify, predict, do this segmentation, or try to analyze behavioral some behaviors and patterns in financial entities. But I see it as a complement. So how we see it today is you have a business case. I was looking at a question of credit risk, and then you will develop a model to tackle these kind of risks. So they were asking, how are you dealing with that? So I would say that some months ago, we just try to predict and have some results in terms of predicting past due portfolios according to some risk metrics, and based on risk metrics and some credit information from origination and how this and it behaviors on time and its behavior on time. But as we can advance in this kind of analysis, we will be using more and more information to improve your models. So you can use analyst reports, you can use more in these indexes, credit ratings, and a variety of sources like news and things like that. Also, you can do this cross-sectoral analysis. So the way that we can see it is that we can improve a particular analysis of a particular risk, and you can support supervisors' decisions and supervise, and you can have like a deep analysis of some kind of problematic that you want to deal with. But of course, we will still be using our existing tools. We have some tools that we think that they are solid, such as our risk matrix and our strategical analysis of the business models of the financial entities. So I think that this is a very good complement and for financial institutions that will help us to tackle vulnerabilities in a better way.
Okay, Pai Hong, anything to add to that in terms of the risk assessment of financial institutions?
So I picked up on the credit risk thing that Alejandra shared, and I thought, I'm not sure whether it's the same thing, but I thought I share a use case from us, and maybe the regulators on the call can also, share their experience. So what we realize when we go for inspections, especially credit risk inspections, right? When we review the bank's credit underwriting, risk management, and provisioning framework and processes, we typically have to select samples of borrowers to review the robustness of the bank's credit assessment. And we typically take 20 or 30, depending on the time we have. And depending on the experience of the inspector and the complexity of the loan of the borrower, it may take half a day to 3 days to review a borrower. So we are exploring and developing a tool to automate the data analysis process by using algorithms and statistics. So instead of sampling, we want to build an API or some file transfer protocol that will pipe directly from the bank's credit risk management system, get all the information and pipe it back to our own database. So instead of sampling, we now have the entire population of the borrowers and their financials and other statistics. And we feed it through an algorithm, and which will then estimate a loan grade. So this is our own challenger model. It will estimate the loan grade and identify outliers. So we compare our challenger model's grades with what the banks have. And this will allow us to zoom in on those so-called outliers or those disparate ones. And it allows us to focus our inspection resources and attention on the ones that we ought to spend more time on. So I thought this is kind of a game changer for us, firstly, from sampling to full population. And secondly, it allows us to identify outliers and target and focus our resources on those that are of concern. Thanks.
Great, thanks very much for that, Briault. And in fact, I think that also answers a different question that was raised about how SupTech might be able to enhance the effectiveness of on-site supervision. So I think you've given a very good practical example of that as well. So as we near the end, perhaps I could just ask one final question to you both and ask for answers of no more than 1 minute each, please. What do you think the use of SupTech will look like in your authority in 5 years' time? So Alejandra, over to you first.
So we have started with AML, CFT supervision, and also with fintech entities. So in 5 years, I think that we will be dealing with all supervised sectors, not just these two sectors, and we will have these already in place analytical models that we can be working on and we can be using for an enhanced surveillance. So the way that we saw surveillance before, I guess that we will never go back to that. I think that Pei had raised a very important point. We were analyzing samples. Now we will have the whole pictures of all the universe of information. So we will be analyzing full information. We will be using all data available, or most of it, because this is a very important supervisory issue. We are not using all the information in some cases, and I think that is a very important challenge for us. And we will be having less, maybe we will be having less on-site reviews and more off-site supervision in the following years. I think that 2020 is the starting point of it, and I think that this is something that will change the way that we supervise forever. So I think that SupTech is a very important part of it.
Absolutely. Thanks very much. Pai Hong, final word to you, please.
Yeah, and I'm hoping to see more predictive data analytics, and something I would like to achieve myself. So currently, a lot of analytics we do are more descriptive. Hoping that in 5 years' time, things will be more predictive. And the other thing is, this is my personal preference. We are using emails as our main model to do work. I'm hoping in 5 years' time, when we go to the office, we will look at surveillance dashboards, like those futuristic things that we can move around instead of using emails and the usual Word documents and all. But yeah, some lighthearted remarks.
Oh, not at all, not at all. So a predictive prediction for 5 years' time. So I very much hope that works. Okay, well, thank you very much then to both of our panelists, Pai Hong and Alejandra, for some fascinating answers. Thank you also to you who have joined this webinar for asking so many questions. I'm sorry we didn't quite get to the end of all of them, but I hope we nevertheless managed to cover the majority of them to your satisfaction. So thank you very much for joining. We started on time. It was always my intention to finish on time. So on that basis, now it's back on the hour. Thank you very much, and have a great rest of the day to all of you. Thank you.
Thank
Have a
you.
great day. Thank you.
Bye.
Bye. Thank you.